just really quickly, I thought it'd be great to get both of you guys on the same segment because Rabia Iqbal, like you run a crypto fund of funds, and your sort of mandate is investing in Web 3.0, kind of finding new applications of blockchain technology. And your background is really interesting because you kind of come from the traditional hedge fund arena. You've worked at Co2, you were at Mubadala, the sovereign wealth fund, and so you've seen a lot of I guess traditional equity investing. And from what I understand, you kind of got into crypto in 2017. And then Jeffrey, your background's fascinating because you used to be the chairman of Intermix, which was the parent company of Myspace. So you've seen sort of social media for the last I guess 2 decades now, and kind of been at the center of it. And now, as CEO of MeWe, you're spearheading kind of MeWe's transition towards leveraging the blockchain. And I think MeWe is a very interesting example of just how Web 3.0 is evolving. We've obviously, had a pretty tumultuous last 12 months for technology with, frankly, most tech companies in the U.S. getting, cut in half or more in terms of valuation, and the same could be said for crypto. There's been an enormous amount of sort of pain in the crypto industry with like many crypto businesses going bankrupt. So I feel like, there's the saying, trouble meets opportunity. It's always, I think, interesting to see what opportunities arise when there's a huge amount of volatility in any industry or sector. And so, Rabia, maybe we should start with you just to get a little bit of a backdrop on kind of your thoughts on the industry. Maybe to start, if you could just first tell listeners about your fund of funds, Nural Capital. I'm sure they'd love to hear kind of the general, kind of the purpose of the fund, and then we can get into blockchain a little bit.
Sure. Well, thank you so much, Divya, for having me. And it's kind of an understatement that you said there's been some pain in the industry. It's really been one of the toughest times in the space right now. But I do think that the silver lining there is that tough times do make you more resilient. And we hear this a lot in crypto and blockchain, that it is an anti-fragile technology. And so that's only becoming more and more clear after 2022 and everything that's been happening with the drawdowns. And so kind of rewinding and going back to how I started in the space, like you said, I started in 2017, kind of tinkering around and investing, kind of just from my PA. And one of the things that I really understood at the time was we were really on the brink of something. This technology is going to be transformational, and there is definitely going to be a place for blockchain and crypto in the future. We might not know what that looks like. It might not kind of manifest in a cryptocurrency type of way. It might kind of go back to the blockchain and the applications, but there needs to be more emphasis and focus on it. And I saw very early on that most of the opportunities were only going to a handful of VCs who were already connected in the space. Very few individuals could even access those the space kind of beyond opening an exchange account. And the whole thesis behind Nural Capital was to link individuals and family offices to great fund managers who were finding really great opportunities in the space, and giving them access to be able to participate and put their dollars to work in this transformational technology. And so basically what Nural Capital does, is that it's a fund of funds for mostly venture capital funds in the crypto space, but some liquid funds as well. And we try to build a broad diversification across all different subsectors. We cover NFT, gaming, metaverse, DeFi, CeFi, infrastructure, Web3, and we try to bring the underlying LP access to as many portfolio companies as possible in this space. And truly, we don't know what this is going to look like in 10, 20 years, but we do know that this technology is here to stay. And by participating and learning from as many different aspects of it, you have a better chance at participating in the upside, but also educating yourself as this becomes the future of of how we interact every day. And so it's a typical fund structure, a fund of funds, and LPs kind of commit, getting access to everything. And then kind of through our reports and through our webinars and different publications, they're able to learn and educate themselves as well about the space and what's going on, what's happening, and what to look out for.
So in addition to the funds that you guys are invested into, Nural also does direct deals, right?
Yeah, exactly. And that was kind of important to us because, traditional fund of funds, find great fund managers and have them kind of invest in everything. But because crypto is a little different and blockchain is a little different, there is an equity and token component as well. And specifically investing in some tokens can get LPs liquidity faster. We wanted people to kind of participate in that upside because that's a very important part of what we're trying to build and how we're trying to introduce people to the space. And so there is a direct component of the portfolio that has some equity and token exposure as well. It's a smaller piece than the fund of funds part of the portfolio, but it is an important part of the story that we're trying to tell as far as diversification into the space.
Yeah. So when you're evaluating these managers, how much transparency do they give you in terms of what they themselves are invested in? Like, do you have to diligence like their underlying investments as well? I'm just curious how that process works.
Yeah, I'd say that transparency has increased quite a bit recently. There was a period of time where there wasn't as much transparency, and it was difficult to kind of really understand what that manager was trying to do and kind of what their thesis was. Because this is a nascent space, people are constantly changing also their investment philosophy. And there are things that cause you to change that, right? There's regulations that are coming out. There's guidance that's coming out that can cause you to change how you think about the world as well. But to our core, what we try to do at Nural is we try to kind of combine the different managers who have slightly different investment philosophies, so there's not so much concentration overlap in the underlying portfolios. So, what we offer to people versus if you were talking to a fund yourself is like we can get really deep into what their thinking is, and then we can make an assessment of what types of things that they're going to be investing in, what types of portfolio companies, what thematic parts of the blockchain are they're going to focus on. Because as an LP, you can only do so much to kind of guide a GP in what they're investing in, and so a lot of times these their investment policies are very broad too, and so it takes a lot of knowledge of the space, knowledge of that person's investment style, and kind of their background as well. One thing that we have at Nural that really makes us special is that we are actually partnered with Nural Capital. They were our earliest backers. And my partner, Jahan Chu, who's the founder of Kinetic, is also a GP in Nural Capital. He started investing in this space in 2013. Kinetic is known to be one of Asia's oldest blockchain venture funds. They have compounded knowledge of this space, and they've invested through many different cycles. and they've invested alongside many of these fund managers. So because we have that institutional knowledge, we can kind of take a educated guess on where people are going to be investing, what we like to call it, what tribes they're investing in, right? So like there are different tribes within crypto that kind of interact and invest together. And so, you know, we can make more educated guesses to what people are going to be investing in. But I mean, it is a good point, you know, there historically was not that much transparency because we knew people intimately. We were able to kind of guess that a little bit better and kind of like model that out. But now we're seeing a lot more transparency. We're seeing a lot more reporting. We're seeing a lot more communication from fund managers, which is only better for the industry.
Yeah, I mean, was that something that came about because of the FTX collapse, or, I mean, there've been so many collapses that it's hard to keep track of, but would you say that was kind of the main, like, I mean, at least it feels like one of the bigger kind of pivots in the industry, but yeah, I was just curious to get your thoughts on the impact of FTX.
Yeah, I mean, it really started with 3 arrows, and that's when people started really kind of asking a lot of questions. Investors and institutional investors who were playing in the space got really concerned with custody and just management and risk management in the entire space. And so that's when like questions started percolating and like due diligence became a bit more front and center. And with FTX, that was kind of a real push. And you know, you see now a lot of institutions have kind of backed away or are building more rigorous processes internally because they were directly impacted by the FTX events. And so transparency now, it's people don't even question you, you know, but before you would ask about service providers and people would just be like, oh, look at page, you know, 12 of the deck. And now people actually spend the time to be like, well, we diligence these 5 service providers. This is why we picked this custody solution. So people are, you know, it's not an afterthought anymore. It's very much front and center.
Yeah, that's definitely a good thing for the future of the industry. In terms of the different trends you're seeing, at least putting FTX aside, you know, you had this explosion in DeFi that's probably been muted somewhat over the last year, but certainly as far as like the decentralized applications that were taking off, like DeFi was, I'd probably put that as number 1. You had NFTs, then you had kind of this, I guess this like stablecoin world. Then you have these this other category of decentralized applications across a variety of industries, communications being one of them, social media being one, that I think are still pretty nascent. But I guess of the various pools of decentralized Web3 apps, where are you seeing the most real like user traction that kind of goes beyond hype?
Yeah, so that's a great question. We actually, so where we've seen CeFi be put really to the test in 2022, I mean, you're looking at firms that raised unprecedented amounts of capital in previous years, 2020 and 2021. FTX raised 420 million, BlockFi raised about 500 million, Celsius did like a 400 million round. I mean, these were crazy numbers, and what's the common theme there is that those companies no longer exist. And so CeFi really was put to the test. I mean, you saw Coinbase's stock price kind of plummet as well. So there's going to have to be a reworking of centralized finance and the way that it plays into this space. And one of the things that we've been seeing a lot now is like proof of reserves. Binance is showing that regularly. Other platforms are as well. And so, there are things that are coming front and center now to kind of help prop CeFi back up, because CeFi is a really important player in this space too. You talked a little bit about
it is
DeFi.
It's the on-ramp to this whole world in a sense, right?
Exactly. And when we take our thesis of how things are going to work in a few years, we're not DeFi maxis, right? Like, we don't believe that like everything should be decentralized and get rid of all the centralized institutions. Like, that's not practical in today's day and age. We think of everything being kind of in this hi-fi, like this hybrid finance. And so we need a strong DeFi to achieve that. And we've had a lot of bad actors wash out, and there's going to continue to be washout in that space. And CeFi will continue to kind of move in the right direction. But what we have been seeing that's promising for DeFi is actually that one of the biggest players in the space, Uniswap, just even after kind of Three Arrows and all of this market turmoil, raised a significant round from one of the top blockchain venture funds, Polychain. And JP Morgan actually recorded its first DeFi test transaction in the fourth quarter. So, with Uniswap doing so well, in fact, its market share is now 70%. They're averaging a little over $1 billion of daily volume every day, which is great to see, kind of post FTX. It is kind of is heartening to see that there is a trend and DeFi is not dead. And then with the tweaks of CeFi, there will be like a middle ground. And, with the fact that these kind of established institutions like JP Morgan are coming in and also testing out the blockchain, that's comforting too. So, while things are tough and it has been a challenging couple quarters, there is a light at the end of the tunnel. It's going to take a little longer to get there. I'd say that's kind of on the.
I was going to say, do you have a view? Because I mean, the reality is a lot of the frontier stuff in blockchain is still largely indexed to Bitcoin and Ethereum pricing for whatever reason. I think it's hard to separate like what's going on with underlying crypto pricing and what's going on with like the broader ecosystem. Although I would say in the future, those things should be somewhat divorced. Like how much of like, I'm just curious, do you have a view on where, like which of these blockchains, if you were an investor in like liquid tokens, like, do you have any views on where people should be looking, just from a return standpoint, if they're interested in liquid tokens?
Yeah. So, this isn't investment advice by any means, but one of the areas that we are actually very excited about today is a investment that we did on our direct side of our portfolio. We invested in the seed round of Aptos, and while there are obvious challenges with layer 1 and layer 2 infrastructure, we do have a strong belief that Aptos is going to be a strong player going forward. I mean, already in 2023, they've shown the token price has shown strength, and they did a tremendous rally in January, and they've raised a decent amount of capital. They are spun on, and for those who don't know about Aptos, they were part of the team that spun out of Facebook and Meta, and what we really like about them is that this team is coming from, actually coming from a like real world application, Facebook Meta, that had very strong user engagement. And so the team really understands kind of how to master that. On top of that, they're built on the Move programming language. So they have a leg up on attracting great developers as well. And kind of marrying those two things together, we think that Aptos will be able to build strong infrastructure in the long run. To onboard the next billion users into the space, we're going to need better infrastructure. I mean, using Ethereum, and I mean, I love Ethereum. It is one of the smartest tools that's been built, but using Ethereum today to transact, and it just isn't practical. And so we are going to have to adapt to that. And I do think Aptos has all the right components of that to get us to that next billion-dollar user infrastructure. So that's one of the ones from our portfolio that we feel strongly about. But you know, there's a lot of other strong players too. You know, Solana's taken a big hit recently, but you know, their developer numbers are very strong as well. And you know, there's great things happening on the layer 2 side with Polygon as well. So you know, it's gonna take a little bit of everyone coming together to really prop things up.
Super interesting. Jeffrey, tell us about MeWe. I feel like this might be a good segue. I think most of the folks in the call probably aren't familiar with it, so maybe you can give a quick summary of MeWe, and then we can talk a little bit how you think MeWe may benefit from blockchain technology.
Sure. First, I want to acknowledge what a wonderful sweater you're wearing there, Divya. It's fantastic. I really like it. I feel like I'm overdressed over here with my collared shirt. And I also want to just thank you. Divya serves on our board, so shows a lot of confidence in what we're doing by having you participate, you know, given who you are. So it's interesting. MeWe is something that if you talk to a bunch of people, since there hasn't been a lot of marketing done in the past, it's a platform that has 20 million users on it. And we are based in a completely different business model than Facebook and Snapchat, whom we compete with. And our business model is more based upon the subscription side of things. So we don't company surveil you. We don't influence your feeds. We allow you to have direct and authentic interactions with your friends. We're private. We have 600,000 groups on the platform. Most people don't know that. So it's really a group-based platform that way. And as we started to look at the market, we thought, well, we don't have tens of millions of dollars out there to start competing with, the Facebooks, the Snapchats, and Twitters and the like, although we think our tech is better. What we need to do is really change something fundamentally, the way social media is looked at. And as all of you know, with children and this world, 15, 20 years ago, when I was at Myspace, that was the beginnings. You, Divya, with Facebook and Harvard Connection and all that you were doing. The governance didn't exist at that point in time. But people weren't spending so much time on social. And today we have to be so much more responsible to users. And so what we're trying to do is change the paradigm, shift the paradigm on how social media will take place as we move forward. So we partnered with Frank McCourt, McCourt Global, and Frank, we had a commonality of values to really, we look at this as a movement we're doing to Web3. So we looked at it and said, on Web3, there's an opportunity. Because we're subscription-based and not driven by ad revenues, and because I don't sit in a chair like Elon Musk or Zuckerberg or Dorsey or whatever and make a decision to throw people off the platform or keep them on the platform. We believe the governance, and we believe it should be more of a democracy. So our thinking is, by partnering with McCourt and his Unfinished team, that we would move MeWe over time onto the blockchain. And our bet, Rabia and Divya, was a little different. It was Unfinished wrote the tech based on the Ethereum platform. But in reality, we, in discussions with Gavin Wood, who was a co-founder, obviously, of Ethereum, we found Polkadot to be a much more robust platform for growth. And so, because we believe there's going to be hundreds of millions of people as we move towards this social web, the new social media on the web, that are going to, it's got to be scalable, and the costs have to be a certain way. It has to be cost effective. In addition to that, we found Polkadot to be much more content and user and creative friendly to that community. And my background, I come from the production world, the entertainment world, in addition to being a KPMG guy. So I'm trying to get to a place where we can take those creative aspects to make a technology platform more compelling and more usable. So moving to Web3 with Polkadot as our foundation, with our partner Unfinished, we just believe that we're the first in moving this way. We believe we're the first in, and that we have a real head start in what we're trying to do. And if we have the proper capital to market and share what it is we're trying to do, there's a whole plethora of opportunity that before us in this whole Web3 space.
And Jeffrey, can we just talk a little bit about why the transition to Web3, it makes strategic sense, and how that would work? I mean, so is the idea that the 20 million MeWe users would be able to, essentially be compensated for their engagement with the platform through some sort of, some sort of virtual token? Is that sort of at a high level kind of what you guys are gunning for?
Yes, it's similar to that. I'm not going to get into the token economy of it right now, the token economics of it right now, but essentially we're responding to what our users want. They want control of their data. They want control of their own social graph. They don't want big tech hijacking it for their own ad revenue benefit. So what we're doing is we're communicating with our 20 million community, getting as many of them via tokens and just the desire to double down on the privacy aspect of what we're doing, to move them over to this blockchain. And like I said, this frequency layer that sits over Polkadot. And so that's number one. It is a movement, and it's a network effect that we're hoping takes place to draw lots of people there. And we're hoping we are not going to be the only ones on this platform. There'll be other companies and so forth. And we're going to first, and this is happening really within the next 90 days, is we're going to have a universal login protocol. And so that'll be launched in 90 days, 4 months at most. So sitting on the blockchain, you're going to be able to go in and out of our app to other apps that exist there or developed on Polkadot. That's number one. And then moving forward a little bit later on, your social graph, your entire structure and footprint of your interactions will be on the blockchain. You will control that yourself, and we'll be able to help you leverage that with tokens and other things.
I think it's super exciting. And I think what's also interesting is that whenever this transition occurs, MeWe will be kind of overnight the largest community of its type living on the blockchain. I'm not aware of another app that has that kind of scale, but maybe you can expound on that.
Sure. So we will be the largest on this whole Polkadot Web3 in this largest world in terms of our user base. Obviously, the folks that convert will determine what the usability of it is and the true numbers that come from it. But we are definitely the largest platform moving to it.
Rabia, this is for you. I mean, I think it's interesting that Jeff's team kind of chose Polkadot as their foundation. and this is obviously a big debate, like which layer one is going to win. Do you have a view on that, or do you see sort of a world where there's numerous layer ones, and maybe they have specific use cases that they're better suited for than others, and that they can all kind of be successful? Like, I'm just curious what your thoughts are on that.
Yeah, I mean, great point. And kind of similar to what I was alluding to earlier is that we believe that multiple layer ones will accrue value and usage over time. Our goal today is to get to that next billion, 2 million, 2 billion users. And we need the right infrastructure to do that. And some applications will find that infrastructure on different protocols, and that's okay, because we are all working to create the right infrastructure to get users to engage. First, we have to have the people there, and kind of the ease of use there. And so it is going to be a multi-chain world. Over time, there might be one winner. A lot of people thought that was going to be Ethereum for a while, but we don't even know what this is going to look like in the next 3, 5, 10 years. There might be another protocol that's kind of being developed in stealth right now that's going to be the clear winner. We just don't know. So if everyone can find a way to work together right now, I think that is the most beneficial thing, especially in this bear market.
Are there any like real world apps that you're seeing are kind of getting traction with like normal people, as opposed to, say, just pure tech wonks or crypto bros and the like? I mean, I think MeWe is interesting because MeWe is an actual app that people use, not because of crypto, but because they appreciate the service and they use it as a venue to share their thoughts and the like. And I'm just curious what you're seeing in terms of use cases that are working outside of just the use case of buying and selling a crypto for the sake of making money.
We talk about this a lot in the context of NFTs. I think NFTs are a great gateway for people. They're fun. And then there's also a lot of value to actually a non-fungible token. So if you think about things that are non-fungible, they've been around for many, many years. Think about your credit card number, your driver's license number, your phone number. These are non-fungible things. And, to tokenize these things is just kind of the next step. And so there will be an application where you can use that, and people have already been using them for privacy and identity. But think about how people, like brands, have been using them already. Nike is probably the best example because they earned almost 200 million. I think it was around 185 million in their NFT sales. While it's a different kind of importance. It's important to the person who feels kind of brand recognition and identity through that brand. That NFT is very important to them. Also, Gucci and Tiffany's and Reddit have also been using NFTs. So like there are, I guess, like, aside from like buying and selling cryptocurrencies, there are these like applications where people, mainstream people are coming into the space, and they might not even realize they're coming into this space, but that's their gateway. So that's
do you think NFTs are going to be more important if the metaverse becomes reality? I don't know if you have thoughts on metaverse, but how metaverse and blockchain kind of overlap, I think, is very interesting.
Yeah. I mean, I do think NFTs are going to be really important because just the pure idea of being able to kind of store everything in this unique token. So we've invested in a company called Snickerdoodle that actually stores your web browser cookies on an NFT. And we think it's a great idea because, you know, you are already surfing the web and you're already hitting accept cookies on every website just because you want to have a good experience. And what if the user get to accrue value for hitting accept cookies all those times, and all of your user data that's being stored in your NFT, you can then profit off of it through getting drop doodle tokens, and then you can transact with those doodle tokens, or, the whole idea isn't built out, but, that is the future, right? Like, you as the user of the internet should be able to accrue value for going on certain websites or people taking your data. And so this concept of NFTs, it'll be important in the metaverse. I think it'll be important in your day-to-day life as well. And TBD of which one's becomes more important. But we think that, to our core, we think that Web3 survives when you, the user, don't feel any difference, right? So it's not like you're going to have to go into the metaverse and interact with all these different things that are foreign to you now, and like that's how you're going to be like in Web3. We think it's going to be like, you log on to your computer, you check your email, you do all you like have a transaction, and on the interface you feel like it's Web2, but on the back end all these Web3 things are happening and making the experience easier. So like, while I do think it's important in the metaverse, and it will be an important part of the metaverse, I think it's going to be even more important part.
Divi, that's important to us, what you just said, Rabia. It's people need to, right now there's so much vernacular that people don't even understand. And you have to be in this DeFi, crypto, blockchain. Most people think that blockchain equals crypto. I'm talking the regular consumers, maybe not people obviously on this call. So we have to simplify things to make it more available to the mainstream, and that's critical. And it has to be transparent, like you said, Rabia, for people to be able to use this. And one of the things we're doing is we're moving to a follower model also as well. So people can come in and out of our app where it won't be a closed environment. We'll be able to interact with other apps. So our universal login or social graph, like you talk about, Rabia, it's a great idea to have your social graph or your whole browsing history as part of an NFT. We're looking at ways to help people be able to monetize that as well. But look, social for the future is critical. And if we don't get our arms around it and change the way it is being governed, the way it is being now in the forefront, you heard on Joe Biden's State of the Union, he talks a lot about that. So we have to get our arms around social. And I think social is going to be one of the largest, if not the largest, utilization for the future of Web3.
I think that's well said. Although, to be honest, I didn't actually watch Biden's State of the Union address. I'm going to have to catch the highlights on YouTube or something later. But look, guys, this is really, really great. It's very interesting to hear kind of both of your takes, because Rabia, you're seeing things from a higher, further distance, because you're looking at a lot of different opportunities. And Jeff, you're kind of in the weeds, in the trenches, as far as trying to make use of a lot of this tech for a specific app that you're managing. So it's very cool to hear kind of how you guys both see the future evolving, through kind of different lenses. So anyway, thanks again for taking the time to chat with us, and we're gonna transition to a somewhat different discussion about Apollo and some of the alts managers. But later this afternoon, I'm actually doing a talk on big tech with a guy by the name of Brad Erickson, who's the internet analyst at RBC. And so he's gonna talk about a number of those names that could easily be disrupted down in the future by some of the stuff that we've talked about here. So feel free to join in on that if you guys are interested. But anyway, thanks again, Rabia and Jeffrey. This is really great.
Thank you, Divya. Appreciate it.
Thank you. Thanks so much.
Awesome.
Nice meeting you, Rabia.